Welcome to Friday Takeaway. This week we look at EcoWorld and Country Heights, very different growth stories, however. Okay, let's be frank. I know the only thing people want to talk about was how Germany crashed and burned, but other things did happen this week. Trade jitters continue to infect Asia, with the Shanghai Composite entering bear market territory. Most analysts, though, seem to see it as more of a holding pattern as the details actually shake themselves out. However, it turned out that while the current US administration is A-OK with separating kids from parents, its planned crackdown on foreign investment was actually less severe than feared. It has been dubbed the biggest haul in Malaysian history, whopping 1.1 billion ringgit. That was the total of all the items taken from 6 of ex-PM Datuk Sri Najib Razak's residences. It included a whole bunch of cash, 423 watches, 12,000 pieces of jewellery, including 14 tiaras. Who needs 14 tiaras? CCID Chief Datuk Sri Amar Singh said that Najib and Datuk Sri Rosmah would eventually be called in for questioning. Also, it is interesting to note that the MACC has raided Jolo's apartment here in KL, apparently it's in Kiaping. And for all of you who have seen the pictures, isn't it really appropriate that the only poster on the wall is from Scarface? TRX City also said this week they would ring fence around the 2.4 billion ringgit from its initial investment to give it some cash flow certainty. At the beginning of the week, TRX said it had also filed a police report saying that 3 billion ringgit had been transferred from TRX to 1MDB, but somewhere along the way the funds got diverted. The market continues to be depressed, literally, figuratively as well, closing at a one-year low of 1,665.68 points yesterday. This was, as previously mentioned, a lot to do with the US-China trade war, but it did pick up a little this morning to 1,697.89 points. However, that is still lower than it was a month ago. So when the market goes south, why not look at businesses that are a bit more solid? This week, we take a look at stalwart EcoWorld and loss-making Country Heights. EcoWorld just announced its results, and while Country Heights just announced its plans to build up a billion ringgit war chest, but by doing so, it would not be a pure property player anymore. But you go with a certainty or catch something that could turn a corner. So let's size them up. Most would know the name EcoWorld, and in particular, we're talking about the Malaysian arm of the group. They have 18 developments all around the country. It has a land bank of 8,052.7 acres, and all of that has a GDV of 87.5 billion ringgit. It saw its second quarter net profit improve just a touch, just over 2% to 34.45 million. This was due to contribution from its projects in Klang Valley, Iskandar, Malaysia and Penang. It also managed to achieve sales of 923 million as at end April on its Malaysian projects. Impressive when you consider how property still remains on the softer side. But the numbers aren't so rosy when you take in the full 6 months. Net profit dropped over 60% to 58.54 million. Top line actually dropped 16% to 1.06 billion from 1.26 billion last year. Apparently, it was due to according to them, to an inclusion of a gain on dilution of equity interest from its unit Paragon Pinnacle. Also, because of GE14, a lot of people understandably held back making any kind of purchases. But another not good sign is other property companies like TA Global, Masing, they've announced their intention to defer their launches. Its share price has remained fairly flat even with the improved numbers and was trading at 1 ringgit 23 this morning. That is still around 70% lower though than it was at the beginning of the year. Consensus seem to think that EcoWorld is most definitely a buy though, with the top end of the target price for analysts at 1 ringgit 60. A more modest estimate though is 1 ringgit 80. They are a property conglomerate, meaning aside from property, they also have units involved in health and tourism and education as well. They are the people behind the mines, and their most notable hotel is the Palace of the Golden Horses. Country Heights Exec Chairman Tan Sri Lee Kim Yew actually said this week that it was planning to raise a 1 billion ringgit war chest. He wasn't clear on exactly how, just that it might be through bonds, borrowings, or even strategic partnerships. But he was clear on where it would go. 4 new areas, including wellness and anti-aging, a car city centre, a trade and Islamic centre, re-strategizing as well as current tourism business. All part of a plan to create what he calls Country Heights 2.0. Company is loss-making though, and there's no way of sugarcoating that it has been for a few years. Hence the need for this rebranding and rejigging. To their credit, it has been narrowing, but still something to keep in mind because for its first quarter, it clocked in a net loss of 2.4 million ringgit. Also, another thing to kind of think about, it's not going to be a pure property player anymore, as it says that space is already too competitive. True. but some may not like that it's moving away from what it is best known for into areas that it may not have expertise in. No analyst coverage for this stock, but its last traded price was 1 ringgit 36. On average, Country Heights trades at about 1 ringgit 23 cent. Highest is 1 ringgit 41, lowest is 1 ringgit 3 cent. One other thing to note though, it is embarking on a bonus issue of 1 warrant for every 2 existing shares. Fundamentally, this doesn't change anything, but it's always seen as a sweetener for those who already hold the shares because the warrants themselves can also be traded.